managing your business so you can sleep at night, so you can leave your business and go on vacation. If your business is set up for that, you can get bonding. And if it's not, get a good bond agent and work with them until you get to that point.
Less stress, more time, more money. Welcome to the Cash Flow Contractor Interview.
Martin, you were in Memphis this summer, right?
Last summer.
Yeah, this past summer, not in the future, obviously. What did you think about Memphis?
I love Memphis. I've only been there a few times, but what's the name of that hotel in Memphis? I'm asking our guests.
Peabody.
Peabody, where ducks come down the elevator in the morning, a whole herd of ducks.
Is that real?
And they go and they swim around the fountain in the lobby, and then at night they march out of the fountain, go to the elevator, and ride up to the top where they spend the night.
Is that a real thing?
Do you know the story behind that, Martin?
I do not.
Well, back in the 20s, it was legal to use live ducks for calling other ducks for hunting.
For decoys?
Yeah, Memphis is flat as a pancake, so we live for duck hunting because, that's one of the main things that we like to do. And so the manager and the owner had their live calling ducks with them after they came back from a hunt one morning, and they put them in the fountain there at the Peabody, let them swim around. And the rest is history.
Well, people go to Memphis just to stay there and see that.
Yeah, they live in a palace type of structure up on the roof, and they ride the elevator down at 3:00 every day. And then there's a duck master in a uniform, and they roll out the red carpet, and they come off the elevator, and they march to the fountain and swim around.
Wow. Talk about a competitive advantage in business.
Right.
Having a duck master.
But no, Memphis is my idea of starting to be in the real South.
Yeah.
Barbecue and music, and the Memphis Belle's out there on an island in the Mississippi, isn't it? Or used to be.
Yeah, well, they just moved it up to Washington, D.C. to a museum where it's better cared for. But yeah, Memphis Belle's from Memphis, famous B-52 bomber, home of Elvis.
Right. Yeah, home of Elvis.
Oh, I forgot Elvis.
So many good things. Yeah.
I have to say one last thing about Memphis that surprised me. If you look at the risk of death from earthquakes around the United States, the number one place is what, Stephen?
I would say Memphis.
Memphis.
Why Memphis?
Yeah. Because there's a major fault running under there, and then it has mud or soil on top, which amplifies the waves. And anyway, I was shocked to find that.
You better get out, Stephen.
I don't. Yeah,
you know all about risk.
Good.
No. First, before we get into today's topic, we're going to be talking about being bonded. But I want to hear a little bit about your journey as a podcast host, Stephen. How did you get started? Why were you crazy enough to do it?
Well, I guess about 1.5 years ago, a couple of friends of mine, Rob Williams, who's a construction business coach like you, Martin, and Wade Carpenter, a construction CPA friend in Atlanta, we decided to start doing a podcast together. And it's called the Contractor Success Forum. And we have about 100 topics you can download and listen to. And Martin was our guest back in July. Yeah, he had met Rob somewhere, and they got to be friends. And it was, really one of our most popular podcasts. And
don't do
thank
that.
you for that.
You're going to inflate his ego, Stephen.
Yeah, you might put that in the show notes, Khalil.
Yeah. Okay.
I mean, most quotable moment.
Cash flow is a popular topic.
Yeah.
Cash flow. It's everything to a contractor. So anyway, what we do is we do it just for information purposes only, is just to get out information about the finer points of running a construction operation, things you need to know. So Rob's a contractor that I used to bond, by the way. And Wade is a second generation construction CPA. And I can just tell you that any construction CPA will tell you they don't learn it in college. It's an art form. So there's that.
I mean, kudos to you guys for running a show. You're about to cross 100 episodes. I know how difficult that is. Consistency is so important, but it's always a challenge too. So everybody go check out the Contractor Success Forum. You can find it on anywhere you listen to podcasts, also their website, contractorsuccessforum.com. You mentioned bonded, that you used to bond one of your co-hosts. And I know as much about being bonded as I do about DNA reproduction. And so I get the concept, but I really want to better understand it. I'm sure that there's contractors out there or people in business who want to understand more about being bonded. So Stephen, what does being bonded mean?
Well, being bonded is getting a company. They're usually almost exclusively insurance companies that have bonding departments, and they guarantee you're going to do what you say you're going to do. So there's different types of bonds. There's license and permit bonds that you get every time you go to start a new project in a new city. There's certain permit bonds you have to get. Well, we do those too, but they're easier to get. They're called license and permit bonds. Second thing is construction bonds, performance and payment bonds. They guarantee you're going to do the project that you bid in the time frame and in the scope of work according to the contract, with no liens and all suppliers and subcontractors paid. So there's a performance and payment bond that we issue, but every contractor has to start with a bid bond. You want to bid a job that requires a bond, you have to be pre-approved for bonds, Khalil. So that's what we do. We are a broker that's kind of a matchmaker, construction yenta. I don't know, but our job is to match you up with the right surety company.
Yeah.
And those surety companies, like I said, are divisions of insurance companies. That's why you see insurance companies handle bonds. And so just like, the whole subject matter that Mark and I were talking about of specialists, it's like getting a subcontractor to do concrete work. They can do it, but it'll be ugly. So same with bonds. You want to find a surety bonding agent that has years of experience and knows what they're doing, and it's a valuable source of advice. You get pre-approved for those bonds. We help you do that. And then every step of the way ties in exactly with what we preach at the Contractor Success Forum and what you preach at the Cash Flow Contractor. And that is managing your business so you can sleep at night, so you can leave your business and go on vacation. If your business is set up for that, you can get bonding. And if it's not, get a good bond agent and work with them until you get to that point.
So It sounds like that pre-approval process is key. And in order to get pre-approved, you've got to be running a good operation.
Well, it certainly helps.
Yeah. What's the biggest pitfall when going through that pre-approval process? Because I'm assuming, and let's even back up a little bit, you obviously don't have to get bonded for every single job, or else we'd have a lot less contractors. What are the jobs that you definitely have to get bonded for typically, and where it's required?
Well, any municipality, state government, federal government, it's required by law that you get bonded. That's to protect taxpayers' money. And also some owners will require you to provide a bond. And as a subcontractor, you might have a general contractor that wants you to bond back your work to them. So in any situation where a bond is required, it's a great idea to know a little bit about it beforehand, and also to be set up for bonding as a need come up. I have contractors that bid stuff, every week, and contractors that need a bond once every 2 years.
Yeah.
So
I would imagine it's like most things, when you need it if you haven't done it already, then you're kind of screwed because it's a process. You've got to really work through it to be able to get pre-approved. You can't just be like, okay, I've got to bid this job. We're trying to win it in the next week. Let's get bonded. It's probably not that simple, is it?
No, but that's our job,
Right.
is to help you put that information together to get approved. And I used to be a bond underwriter, so it was my job. I was trained to decide whether to give you the bond or not.
Right.
So
Well, what
you
did
could
you
think
decide
of it
on?
as getting a mortgage maybe, but it's
Sure.
not that difficult.
Okay.
I've gotten mortgages, and I always thought bonding was easier to get than mortgages for sure. But,
Yeah. Well, what does it take? Like if we're going through that pre-approval process, me and Martin are starting our construction company. No one's going to accept our bid, but we need to be bonded to be able to put the bid in. What do we need to do? What's the process?
Well, first of all, reach out to a good bonding agent, and if you have a construction professional team in place, lawyer, accountant, construction-oriented CPA preferably, they'll know the best bonding agents in town. McDaniel Whitley, we work all over the country. So you could reach out to me if you want, but I'm happy to talk with you through the process. Did you know there's credit scoring bonds where all they basically do is want to know about your experience, and they run a credit report on you, and they can approve bonds up to $1 million that way.
Wow.
So there's that part of the business, but that's not the answer for most contractors that bid work, because the rates are higher and you're limited. You can only do one of these type of bonds at a time because you've maxed out your capacity. So what we want to do is work with you where you're getting every surety company or bonding company wants your business and are fighting for it. Then you get the best rates, the best terms, and the best options. And you attract the best surety companies. Folks, these surety companies have incredible wealth of information. They have the best lawyers. They have the best data on what causes bond claims. They have the best information about how to keep you out of bond claim and how to support you when a bogus claim comes up against your bond. So again, that's the goal. Does that make sense?
Yeah.
Yeah.
Yeah, for sure.
But are good bonding agents willing to work with somebody, let's say for a year, who's exploring, and you say, you're not ready to be bonded yet. We need to fix these things. Doesn't mean that you're putting in 40 hours a week working for somebody, but you're advising them so that they can grow to the point, have the systems and processes that make them attractive to bonding.
Absolutely. That's what we do all day. And I only get paid. First of all, we don't charge for bid bonds. But if you're the low bidder and you need a performance and payment bond, we get a commission of that bond premium. So that's how we get paid. So if we don't get you approved, we don't get paid. So I think you're getting a lot of value
Sure.
that way.
Let me ask one quick definition. Bid bond, we've said a lot. What's a bid bond?
All right, bid bond is what you're required to turn in with your bid on a job that requires a bond. So the whole list of things you have to turn in with your bond, your checklist of items, unit bid prices, all the forms and affidavits about fairness and every other thing required in that contract. You also have to put in a bid bond form. And the bid bond is 5% usually of the contract amount. On federal jobs, it's 20% of whatever your contract amount is. And it guarantees that if you're low bidder and they don't award the job because you pull out of it, that they can recoup their cost of up to 5 to 10% of your bid to rebid it.
Okay.
So you say, well, how often does that happen? I can tell you never. Never. Because state laws let you pull out of a bid if you made a material miscalculation. So that's one thing. But the whole key is the bid bonds guarantee that if you're low bidder, that we will provide for you the performance and payment bonds.
Okay.
Didn't used to be that way, but it is now. So that's why we have to get you pre-approved, as if you're going to start the job and you're going to be awarded it at the time you bid the job.
Yeah. So it's a method of authenticating your bid. I mean, not strictly speaking, but it's saying, yeah,
Right.
these are real people and we can do this.
Yeah, there's a lot of people out there that'll bid a job and require a bid bond and not a performance and payment bond. They just want to know if you can qualify.
Right.
We're really happy about those requests, as you can imagine, because we don't get paid. But
Yeah.
But you don't
nevertheless,
charge for bid bonds.
yeah, no charge for bid bonds.
Wow. So,
So what, go ahead, Khalil.
no, go ahead, Martin.
Well, what, kind of getting into the weeds a little bit, what qualifies a contractor as being, what are the key attributes that qualify a contractor as being bondable? In other
Well,
words,
there's-
we were talking before, if I come in and my books are an Excel spreadsheet and I do the bidding and I also put up the forms on a concrete job, probably not inspire a bunch of confidence in the bonding company.
Well, what inspires confidence in the bonding company is really simple. They call them the 3 C's: cash, character, and capacity. And you cash flow the project until you get paid. Do you have the capacity to do the type of work that you want to bid? And do you have character? Do you do what you say you're going to do? And all 3 of those are measured by the bond underwriter that makes the decision. Now, on credit scoring bonds, it's a little easier. It's designed to help a new contractor get their first bonds. It's not, like I said, a long-term solution, but if you just need a bond every now and then, we can do credit scoring. So they just look at your capacity and your credit score. To them, that tells them all they want to know about your character.
As somebody who used to be the one who approved bonds or not, what did you look at to determine if they had the cash?
Working capital and net worth.
Okay, so that implies you need to have good books, right?
Yeah, current assets minus current liabilities. Anything you can do to prop up that working capital helps you get bonds. Also, a net worth in the company. Now, a lot of contractors, guys that don't do a lot of bonding, are used to taking all the money out of their company every year. And that's something that's a mindset that we kind of have to reset a little bit if you're in the bonding arena. Because think, what would a bond company, why would they want to guarantee that you're going to finish a project and pay all your bills, and there's no liens on the project? You pay all your subcontractor and it's done exactly according to the contract. Why would anyone in their right mind want to do that? It's because they have faith in your ability to do it over and over and over again. Sometimes a job's a stretch. It's more technical than you're used to doing. And we got to do a little bit of work to sell that to the bond underwriter. Why is this a good fit? Another trigger to bond underwriters that concerns them is when you're going into a new territory.
Why is that?
Meaning geographical territory. Like
Geographical
going from Memphis
territory.
to working in Atlanta, right?
And why is
Yeah.
that?
Well, it's because you're not operating in a territory where all your support is there. Everybody your friends, your other subs, the legal environment of that territory. Is it union or non-union? What about the soil in that territory? What about the things that you didn't understand about working in that territory, the laws? All of that could cause you to have a loss on a job, which could trigger you going out of business, which would trigger a bond claim or multiple bond claims.
Yeah. Interesting. So you had mentioned earlier the difference, that it's important to go and find a good bonding agent. What's the difference between a good and a bad one? What are some signs that you would see walking in and talking to somebody?
Well, I'd say the first thing is make sure that that agent is a specialist in construction. And I mentioned earlier, if you wanted to build a bridge across the river, and we bonded bridge construction projects, we're your folks. But if you have a bakery and you want insurance on that, it's hard. It's like an electrician doing concrete work,
Right.
or plumbing work. Our specialty is construction. So you want to look for that type of individual. Also, it's a people business. So you want to do business with someone you like, and you share similar values. That's important because your bonding agent is selling you and what makes you unique and different and attractive to a bonding company. So a good bonding agent, a lot of them have experience as underwriters. They kind of understand the ins and out. But that'd be my best recommendation for finding the right bond agent. Look for that type of an individual.
Yeah. I'm sure that you got some really good bond stories. And I'd love to hear a few where maybe bonding goes right and it really saves somebody, or where bonding goes wrong. Someone wasn't able to get approved or whatever it might be. What are some of your best bond stories?
Best bond stories. Wow. Well, the best bond stories is when there's not a claim, but there's close to being a claim.
They're not as entertaining.
Well, hey, look, crash and burn stories, we could talk about all day, and they're sad and they're tragic, and it'll bring us all down and our listeners to hear them.
Yeah.
But it's important to know what the elements were in place when that contractor went under. Recently, as in a couple of weeks ago, one of my good contractors was projected for the year end to make $1,100,000 in profit, and they lost $982,000 on one job. It was really two smaller jobs for the same entity in the same location, but what happened was the engineer had put his son on the job who had no experience, and caused a lot of problems. The project manager, who was extremely a trusted and valued employee, had his wife leave, and his father die, and his brother die, all in the same period. At the same time, it was a highly technical job that involved a lot of moving parts that were not ordered on time. So it created a perfect storm. They were behind the eight ball. Huge amount of liquidated damages assessed against the job. And an engineer overseeing the job that wanted them to fail at that point. Don't know why. But this contractor, we rallied up, and with the help and support of their bonding company, we fought them like crazy. The job's finished. It's punched out. It's sad. It's an old story. But the happy part of that story is they made it through, and they're still in business.
They still lost
a
$1 million.
viable account.
Okay. But they did still lose $1 million, 900,000. No.
Yeah. So
They
it
didn't-
happens in construction, We always talk about, construction is the one type industry where there's just no limit on how much money you can lose on a job. But there is kind of a limit on how much you can make. Even with the world's greatest change orders where you're making 100%. But I'm joking about that.
Right.
But so in my business, there's a lot of risk involved. And if you do it over and over again, it's not risky. When there's something new that you want to do that interests you, there's some risk involved. So that's when you need a good bonding and insurance agent.
And in that case, the bonding agent's big benefit wasn't that they wrote a check to cover the losses. It's that they helped defend, and way more so than your client himself would have been able to do.
Absolutely.
Represented and defend. Yeah.
Because what happened was this contractor in no way, shape, or form defaulted on the project. in no way, shape, or form could you say that they defaulted on the project. So the bonding company, we came in to defend them on that and let them know this is not going to be an easy bond claim for you. We're not just writing you a check when you're wrong.
Right.
Anyway, that's a story. But, you know, there's a lot of happy stories. You know, there's a guy once I met that had literally $100 in a pickup truck. He was a painter. And, you know, we got him a commercial job for $1 million painting and went on to become highly successful. So, you know, those are the happy stories of bonding, you know, doing commercial work, just more of it.
Well, that's kind of the point I'm after here too, is people who are on the tipping point of becoming a company that needs bonds from doing whatever it was they did before. So one of the first steps is, if you're entertaining that, go get familiar with a bonding agent. Don't try to do it yourself. What are some of the other changes that you typically see in a company that is transitioning from non-bonding, me and Bob and our truck, and now we got 5 guys, and now we got 25 guys, into a company that is bondable? And I'm thinking about bookkeeping and WIP and things like that, that perhaps a lot of our listeners haven't even heard of. They've heard of bookkeeping,
Okay.
but maybe not WIP.
No, that's a great question, Mark, because what do I do to sell you to a bonding company to get you bonds? Well, for the credit scoring, it's just a one-page application. I email you, and we just work that out. You build your bond cost into your bid. So that's all there is to that.
That was going to be another question. I didn't know who paid for it. It's in your bid.
Yeah, for credit scoring bonds, it's a flat 2.5%. Some of them are flat 3% of whatever your bid is. So if you're bidding a $100,000 job, it's $2,500 premium for the bond. And of course, the bid bond's still free, but if you're low bidder, you have to get the performance payment bond, then you have to pay $2,500. And you need the bond at the beginning of the project, Martin. You usually have about 10 days from the time the contract's awarded to get them the performance and payment bonds. So that's that part. And the standard surety program that we want to help you get to and through involves 3 years of CPA reviewed financial statements, year-ending financial statements that are done on a percentage of completion format, and they include a balance sheet, an income statement, notes, and a completed project schedule, and then a WIP, work in progress schedule, jobs in progress schedule, it's called, work on hand schedule, it's called. So the reason that's important is because the WIP tells you what your backlog gross profit is, and that helps you get more bonds. How much profit is in your backlog of work that you're working on now? So again, good accounting records, a good construction CPA will help you get that. A personal financial statement is required on you and your spouse, all owners and their spouses. And you ask, well, why is that? And it's because a bond is not an insurance policy. If you default on a job, they want to be able to come back against your personal assets if needed to complete the project. Can they get your house? Can they get your retirement account? That sort of thing. No, state laws prevent that. But it's a way of showing the bonding company that we both have some skin in the game, so to speak.
Okay.
So that's another thing. Then they want to know if you have a bank line of credit established. So I tell contractors that don't have a bank line established, take some cash and use it to secure a bank line until you get a track record going with that bank. Also, getting good financial information to your banker helps you get bank lines approved. So those two go in hand. Why do you want a bank line? It's just so you can draw on some cash if you have a cash flow emergency that you're not prepared for. You know, is there a proper way to use your bank line? not really, unless you build that interest into your project costs. So that's that. So those are the main elements. We have a contractor's questionnaire that we help you fill out that just tells us about your business. What is your unique capabilities? What are you best at doing? What makes you good at what you do?
Yeah.
Yeah, I really, in other words, it's a recurring theme here. And I hate to use the words quite this way, but I will anyway. You need to become a real business. And that includes accounting and insurance and HR and things like that, not just I'm really good at pouring concrete and that's what I'm going to do today. And how long, when you said it's a 3-year record to come up with a standard surety process, is that what you called it?
Right.
And that is just a recurring ability to get bonds because you understand
At a good
everything.
rate.
At a good rate. Okay.
Yeah. So
What's a
there's
bad
just-
rate? Can you give us an
Well,
example of a bad
it's-
rate?
It's kind of what we call substandard surety markets. It's a company that charge a real high rate. There may be some funds management or funds control by the surety company. They charge a higher flat rate. The SBA
With an example,
bond
like how
program,
high?
anywhere from 3 to 4% of the contract amount.
Okay.
Is high?
Yeah.
That's a high rate? Okay.
Well, it is. I mean, think about how much profit you've got on a job.
Oh, no. Yeah.
Yeah.
That may be your
Yeah.
profit on the job.
Yeah.
Yeah, and but if it's a job and you don't need a lot of bonds, or you only need one now and then, and you can build that into your job cost, it's a way for us to get the job done for you.
Right.
But ideally, Martin, like you said, we want you to be a real company.
Yeah.
Right.
Martin, you
And-
said with that, not just a guy that's good at pouring concrete. I also want to say not just a guy that's good at sales. Because a lot of times you think that you're doing really well because you're great at sales and you've got this really high revenue line. But the reality is, like, you actually have terrible margins or you just haven't really kept track of things and you're not operating the right way.
Most contractors, they will not accept the fact that they have any overhead either, by the way.
Yeah, exactly.
That's one of the things I say in my book is that, and this is true, most of the businesses, contractors in particular, that I deal with do not know if they made money last month. They don't know. And there are lots of reasons for that, which we won't go into right now, but they don't know. And that's a good place to start. And
Right.
one of the main reasons, you might talk about it, I've seen how they do it. I have a simple way of doing it. I don't know if you'd accept it, but work in process. You have, maybe you've got some money up front and you've done a certain amount of work, but you've done more work than you've invoiced for. How do you keep all that straight? And probably the answer is you don't, Mr. Contractor or Mrs. Contractor, but you have to have somebody who can. And they can tell you, if you were paid for all the work you've done up to this date, this would be how much you had. Some you've spent more than you've been paid for, and sometimes you've been paid for more than you've actually done. That percentage of completion that you talked about. These are really not that hard to understand what I'm talking about. They're a little bit difficult to keep track of. Do you agree with that? Without a professional.
Well, you could be overbilled or underbilled.
Right.
That
Well,
tells a
yeah,
bonding company a lot.
right.
So you're right, Martin. That work in process report is everything. And how do you get one of these reports? Well, you got to have a
Right.
right system in place. And
Right.
we just did a podcast actually yesterday on processes for contractors, and we were arguing that calling it system is just an ugly word. People don't want to hear system, so process sounded a little sexier. So we agreed to go with the process in. But it really is a system that you have in place. An accounting system is one of the most fundamental things you need to have in place to have a real business. And there's estimating systems, project management systems, risk management systems. There's all kind of systems that you have to have in place, but that we call processes. but there's something that you repeat over and over again. And our pitch to our listeners was, if you do that, then you can leave the business for more than a 3-day weekend without losing your shirt. That's all.
Yep. And if you have systems, you're going to make more money too, because money sneaks away all kinds of mistaken false starts.
Yeah.
It just disappears.
It really does. I remember a contractor of mine 30 years ago that asked him how his business did for the year, and he pulled out a wad of money like a pimp to show me, just a big old wad of cash. And he goes, "What do you think?" And I said, "I think, have you paid all your bills yet?"
Do you know what your bills are?
He was pissed off. You some kind of smart ass or something? And I was like, no, I just want you to know that that's pure cash, because I'm happy for you. I'm happy. I mean, that's what I let him know. I'm not being a smart aleck. I am happy for you if you make money.
Yeah.
Right.
Yeah. Well, Stephen, obviously people can get in touch with you through your podcast. What are some other ways people can get in touch with you about bonding?
Well, they can call me on the phone. My cell phone's a good way. Phone number's 901-340-8085. Just give me a ring. If I don't answer and I don't know you, just leave a message and I'll call you back. That's a great way. Feel free to ask me any questions. Like you were saying, Khalil, earlier, no question is a dumb question. It's something you don't know, and you don't know what you don't know. But demystifying the bonding process is what I'm passionate about. And controlling your risk through insurance is another thing. Insurance is a very risky business. It's a very dangerous business. People get hurt, and they get hurt badly. So safety, workers' comp. What insurance product would allow you to minimize your risks so you won't go under because of some unforeseen circumstance? That's what we do.
Before we go, I'd like to say this too, just for clarity. Bonding, I think we can call it a form of insurance, but it doesn't pay you. It pays your customer and
Right.
defends you.
Your own.
Insurance pays you if you suffer the loss. Is that a fair statement?
Absolutely. Thank you for saying that.
So you need both. You need insurance always, and you need a bond if you need one. But the bond is for your customer, the insurance is for you.
That's right.
Yeah. That's really helpful and clarifying. Well, listeners should definitely check out your podcast, Contractor Success Forum. Also get in touch about bonding, going through that process, and any insurance products specific to construction companies as well.
Well, I wanted to tell you before we left a great story on one of my contractors. Was a demolition contractor doing an implosion down on the old hospital downtown. It was a 15-story tall, huge concrete structure, and I was a nervous wreck. I had to write the insurance specifications for the project.
Oh gosh.
And so after the implosion, when the dust cleared, I noticed that there was a bunch of construction equipment holding up the trolley power lines right next to the building that went down, and I had all that insured too. That happened to be one of my customers, and it was done on Mother's Day, so I took my mother to watch the implosion. We had a special little place to do it, and she said, "Yeah, back then the birthing ward was on the 9th floor, and the elevator was broken, and your dad had to push me up 9 flights of stairs. So I hate that place. Blow it up."
Blow it up.
But you know, it's had another contractor that was. I had a restaurant I insured, and this contractor was pulling a trailer that came unhooked from their truck, went through the restaurant, wiped out all the cars, went through the window. Luckily, nobody was hurt, but it was another happy day, Monday for me, because I insured both of those. Another time I had an electrical contractor that was replacing the light bulbs on the Mississippi River Bridge. And I had him insured for interior wiring, of course. And there he was dangling from the bridge on the front page of the paper. And he even put in there that he had designed a rope system that virtually guaranteed none of his workers could be hurt. And the underwriter happened to live in Memphis at the time. And this was back before they even had beepers, Martin. That's how old it was. I had just gotten the newspaper and opened it up when I got a phone call from her canceling their insurance. It was another interesting day. So,
Goodness.
so yeah,
Even though he had a perfect rope system. I can't believe it. Insurance.
well, it
companies-
was just wonderful for any attorney to see that he had written that if someone did get hurt.
Oh, man.
By the way, the highest rated workers' comp classification, guys, is bridge painting. It's 240% of your hourly payroll. So
Wow.
that's how risky it is. So but changing light bulbs, that's not as scary
Yeah.
on bridges.
Well, I'm not going to even. I have a bid offer on my desk to paint bridge out in San Francisco. I guess I'm just going to ignore that one.
I'll be happy to insure it for you. It'll cost you everything you have.
That's
Yeah,
great.
I forgot to put that cost in my bid too. I just took man hours times 1.4.
That's great. Man, well, we appreciate your time, Stephen. Thanks for being on the podcast and part of this advisor mentor series we're doing. And yeah, go find a bonding agent if you don't have
Yeah.
one in your company. So yeah,
And
thanks,
get
Stephen.
started even if you don't have a bond so that you can build up the basis
Exactly.
That's
going
right.
forward.
Exactly.
Yeah, get that relationship going before you need it, guys.
Yeah.
There you go.
All right. Well, thanks, Stephen. Take care.
Thank
Thanks,
you.
Stephen.
Thanks for listening to The Cash Flow Contractor. Check out our website in the show notes or visit thecashflowcontractor.com.